So businesses usually make up about 80% of a business owner's wealth. So what that means is we really got to make sure that it's growing, because if it's not, then your wealth's probably not going to grow. And that's the ultimate point of today. So really going through the challenges that you face, getting down to business is really just about executing on those solutions to get that all checked out. And then the bottom line is just really summarizing all that we discussed today. And like I said, the slides are very basic, and that's done intentionally because I want this to be very open-ended, very conversational. So, just jumping in. So here's a good slide to kind of discuss what we think, at least, and what we've seen, the business owners that we work with, what they face on a daily basis, right? So it's attracting and retaining talented employees, right? So, for a lot of businesses, it's great, to start on your own, but eventually, if you want it to be something that grows and scales, you want to hire the best people you can possibly hire. To do that, you have to put, a structure in place to really keep them there. So that could be a 401k plan, could be benefit package, right? A lot of these resources are available, but unfortunately not a lot of business owners are aware that they're available. So going through that today, funding and expansion. So, if you're fortunate to get started quickly and the business is running really well, a lot of issues that you typically see are the business owners not being able to have access to capital that's going to help them grow. That's really what we want to dive into today. Protect your personal estate, right? So that's kind of the more risk management approach, right? We want to make sure that the business has the right insurance. We want to make sure that if you're sued for any reason, you're able to withstand that. And that's really what that means. You want to obviously protect your personal estate from the business. That's pretty key, especially as you grow and hire more employees and get more customers or clients. So we'll kind of dive into that today. Losing a key employee. So you retain the best talent, right? But what happens if something happens to them? So we want to make sure that, we're discussing that. Day-to-day cash flow is really kind of the most important thing to focus on. If you're not really, growing your revenues, it's hard to reinvest back into the business. So we want to really figure out, what are some ways you could possibly do that. Balancing finances at home or at work and at home. That's crucial as well, because, the whole purpose of you going out and starting a business on your own is really to make sure that, you're living better than what happened when you were working maybe for a large corporation or, in a lower position. So, and then planning for retirement, like I said, 80% of business owners' wealth is usually, in their business. And then the other side of it is a lot of the remaining wealth, the 20%, is usually in the home. So you have two illiquid assets, so it means it's hard to sell those two assets. Basically, you're depending on the growth of those assets to fund your retirement. We want to make sure that we're obviously diversifying out of that. So gave you guys a lot of stuff there. We have any questions, or things we want to discuss now, or please feel free to unmute yourself. Nothing yet. Okay. Karen's smiling. I see Karen smiling. You got a question, Karen? Come on. Nothing yet? Okay. I'm just picking on people. I want to make sure Okay. All right. So, let's kind of start here. So building a team of professionals. So this is a great place to start. Here's obviously the business owner, which is most of you on this call. You want to have an attorney, right? Really making sure contracts are in place, really making sure the structure of the business is okay, whether it's an LLC, whether it's a S corp, whether you choose to go, just the corporation route. An accountant. You have a lot of fractional CFOs, chief financial officers now. A lot of services for that to really make sure your books are in check. you really can't manage anything unless you can measure it, right? So we want to make sure that you have a good understanding of really what your expenses are monthly, what your revenue is monthly, ultimately how much you're profiting and how much you're reinvesting back in the business. So those are really the two key kind of parts right there. So the corporate attorney and then the accountant. Investment banker, business valuation specialist, as you grow, you're going to get, people reaching out to just get a valuation on your business. And it's a good thing to really check out probably every 2 or 3 years, depending on how fast you're growing. But it's key to understand, how the business is being valued every year, or every 2 or 3 years, because you want to know what you're doing today if it's working, right? That's kind of the key. Financial advisor, that's obviously us. There's a lot of advisors out there that do a really good job and make sure that everything's balanced properly. That's kind of the key, and they can help out with a lot of the retirement planning, but also helping you establish a retirement plan for the business. That's something that's very important, as we mentioned, to retain employees, as well. So what they can assist you with is, really creating that mission and vision statement, right? What industry are you in? Is the industry growing, right? That's kind of the first, thing you want to focus on. What products or services are you selling within the industry, right? That's key. What customers are you trying to attract? Who are you selling this to? Really having an idea of what that looks like, and then what other competitors are in the space. That's kind of what you want the mission and vision statement to be, because if you don't kind of know that to start, you don't really know what's going to work or what's not going to work. So we really want to track that. I think someone came off mute. So does anybody have a question on that? Okay. So, the next is strengths, weaknesses, opportunities, and threats. So really identifying, as I mentioned, what industry you're in, what are the weaknesses, is the industry growing or not? That's kind of key, because, if you're working hard and you're making sure to put all the money that you make from the business back into the business, right, but the industry is not growing, you might need to look at, possibly some ways to help out companies in other industries. And what I mean by that is really going business to business. Maybe, looking at products and services in a different industry or a different end market that's potentially growing. Because it's never fun to do all the work and, feel like you're doing everything you can, but, the customer base isn't growing. I mean, it's very difficult. So that's one of the things to do is that kind of that SWOT analysis that we have listed there. Develop a budget and determine your ongoing cash flow needs. So this kind of points to that whole revenue conversation. A good exercise you can do is really track, what your revenue looks like monthly, and then figure out, you also track kind of on a graph, if you will, what your expenses look like in that month, and you can see the trend, right? So if your revenue goes down in 1 month, but your expenses stay flat, that obviously hurts cash flow for you. So you really want to have a good understanding of what that's going to look like for you. Raise capital, that's going to be our next webinar series, but it's super important, especially for Black businesses. We don't really know all the resources that are available to us. And so, having access to capital that's not too expensive to where you're having to pay down loans and it's eating up a lot of the cash flow monthly is going to be key for you. And then building out a senior leadership team is really crucial, because, the legacy part of the series is really going to discuss what it's going to look like when it's time for you to exit the business. And if you try to exit the business and you don't really have a good leadership team in place, it's going to hurt the value of your company, right? So we ultimately want to, like I said, we want to grow the business, we want to scale the business, and then when you're ready to exit the business, we want to sell it at the highest price we can get. And building out a senior leadership team is going to be crucial for that. So on page 5 of this, any questions now?
Yes, Rashawn, it's Sarah.
Okay. Yeah.
I have one question for you. In terms of
Please.
building out a team of professionals, what At what stage are you seeing them being able to assemble this team of professionals? Like, because I know that for small businesses, it's like when can they really act upon that, and when is it feasible? What are you seeing at what level they're able to do it?
Great question. So the attorney's really crucial because you want to make sure the business structure is right, whether it's an LLC, whether it's an S corp, whether it's a C corp. You want to have an understanding of why you're structuring the business that way, and a lot of people do that per hour. It's worth the cost, right? The attorney is kind of the first person, as well as the accountant. I would pair them together to really get an understanding of what the business needs to be structured as. And then the accountant, and like I said, there's fractional CFOs now. We might have, Linda has a question too. I'll get to you in a second, Linda. Thank you for raising your hand. But the accountant is also crucial because they're going to be the ones that really track the financials for you. And like I said, if you can't manage anything if you can't measure it. So you really need to understand what the expenses look like monthly, what the revenues look like. So once you have those two, you usually, and the financial advisor can kind of fit in that banker category where, you'll need access, you'll need a business loan or something like that. Really to get started, to purchase equipment, that's kind of the easiest way to get capital. It's a quick process, and then from there you'll probably need some capital for inventory or just working capital needs. So Sarah, to answer your question, corporate attorney to get the structure right, accountant to really understand obviously what the day-to-day expenses, revenues are going to look like, business banker to really help on the capital side. Once the business gets, usually business brokers come into play. Usually once your value, it's tough to say. A lot of people are different, but it depends. So we'll cross that bridge when we get there, but that'll be later down the line. Did I answer your question?
Yes,
Sarah?
thank you.
Awesome. And thank you for asking one. Linda, how about you?
Yes, my question is, if a business is for newly formed businesses,
Yeah.
do you know of their, like I don't, for lack of better word to say it, a organization out there that helps small to medium-sized businesses obtain these services in a box? Meaning, like there's a company that says, here, let me help small businesses. It's this fee, this fee, this fee, this fee, this fee. And as starting out as a new company, you won't have the revenue to hire an attorney, a financial advisor, accountant, an estate attorney, and an investment banker. But do you know of any
Right.
companies out there that work with small businesses that help them to obtain these at a nominal fee?
Great question. Sarah, we'd have to see, if there's anyone just on you guys' platform, because I want to make sure they get obviously priority. The fractional CFOs are a great resource, Linda. And a lot of times when you work with one, they kind of can guide you with who their partners are. And it's not necessarily in a box, but you're going to get people that have expertise in their specific areas. That are going to refer you to people that they typically work with. You pay for what you get. I'm always going to say that. But to your point, obviously, if you don't have, 10,000 in revenue every month, or if you're just starting out, it's really those upfront fees that are going to be crucial, and that you're just going to have to use as startup costs. But the important thing is to go to the right person first. And in this case, it could be the fractional CFO, it could be the corporate attorney. Sarah and I can kind of look at, who's on the platform and see who we could potentially plug for that. But that'd be who I start with, and then just try to get referrals from them. And usually you get a relationship pricing for that too. So that could be helpful to kind of lower costs for you as you grow.
And if I may, thank
Please.
you for that in terms of our platform, which is the blacklist.la. where we're cultivating a list of firms, businesses that can provide services related to, your legacy building, your whole financial package, but also too that Morgan Stanley is a partner. And I don't want to convey any type of like specific endorsement of any particular businesses. Just want to have all disclaimers and everything transparent and open. But the fact that Morgan Stanley supports the ecosystem by which the BBA is establishing so that our members can be able to have opportunity and access to a variety of different sources. The vetting, of course, at the end of the day will be on each particular business, but um, we want you to know that we're going to be here for you to help you connect you with those that can assist you along your journey.
Thank you for that, Sarah. Linda, any follow-up questions to that? I know we kind of gave you a lot there. It's a great question.
No, I'm complete. Thanks.
Absolutely. I thought I saw one more hand rise. Mika, it might have been you. I don't know if you had the same question.
It was me. Thank you. I actually, Linda asked my question, and I
Great.
put in the chat, part of it. So you guys
Okay.
answered it because there's a lot of social media traps. They offer mentorships and they offer
Yeah.
this in a box, but it may lack integrity and true professionals. So that's
Right.
why I wanted to ask that question as well. Um, Finding those reliable financial advisors, reliable accountants, reliable attorneys. So thank you.
Yeah. No, great question. I'm so glad you brought that up. Looks like Linda has another question. But Mika, to your point, absolutely, right? I mean, we want to make sure that's why we're having this today. I don't want anybody to waste their time, right? Business owners don't have much time to waste. So that's why I said you pay for what you get. If you start with a corporate attorney or a fractional CFO that works with businesses in your industry, they usually have good referrals for you. You can kind of start that way. I know there's a lot of people that, advertise that they can kind of do it all for you wrapped up in one fee, but there's usually holes that come with that. And if you're okay with that and you have the knowledge to kind of make up for those gaps, then by all means, but you shouldn't be focusing on stuff that doesn't really pertain to your business, right? You should rely on experts to do that. So I completely agree, Mika. Thank you for making that comment. Linda?
So Rashawn, are you saying fractional attorneys? FRACTIONAL? Fractional.
Fractional CFOs. So they're basically people that come on staff, and you can hire them on kind of as staff, and you can pay them, per hour. It depends, it varies, but that's kind of how they're positioned. It's rather than having just an accountant that you pay a retainer to, it's really hiring somebody on, and then you have a contract with them, and it could be shorter or long term. But that's usually helpful to lower costs for smaller businesses.
Okay, thank you.
Absolutely. Thank you for the question. Anybody else have questions? I love the engagement. I love that we're getting some people unmiked here, or unmuted. Anybody else have anything? All right. We'll go ahead and jump to the next page here. All right, so this page really is just about, Morgan Stanley's capabilities, but, JP Morgan, Merrill Lynch, I don't mean to hype up our competitors, but, a lot of them, it depends on the team that you work with, but a lot of them have the same capabilities. So really it's about working capital, business investment portfolio funding, right? So for whatever reason, at least for the business owners we work with, they think of these two separately, right? If you're looking at your portfolio and Amazon's up, you're like, this is great. I'm going to be just fine in retirement. This is awesome. People don't look at their business like that, right? They think, okay, my business is just my business. but it's not actually going to help me, pay for retirement. That's not correct, right? Like I said at the beginning, it's 80% usually of your net worth, right? So that means that all the growth that you get from that business is very crucial. It has a huge impact on your wealth, rather than, a fund investment account that you like to trade every now and then, right? So, it's really important to figure out, what are the working capital needs, what are the funding needs that you have, and ultimately, what is your business growing at annually, and compare it to how you would compare a company in the market, right? The S&P. Obviously, nobody here is Amazon yet, right? But you really want to track it the same way you would look at, the value, of a position that you hold in a portfolio. So this really kind of just goes into that. There's a huge correlation with how your business does and what your wealth's obviously going to grow to. And I really just want to make sure everybody's aware of that. So any questions on this? It's a quick page. Okay. All right, getting down to business. So I want to make sure I'm good on time. Looks like we have about 45 minutes. So I'll be really quick here. So managing cash flow, critical 5 up here. So managing cash flow, protecting the business, attracting and retaining talented employees, optimizing investment decisions, integrating your business plan with your personal plan. So this really kind of goes to what we discussed earlier, but it's just given some solutions on how to do that. I'm going to kind of jump through here because I want to make sure we get to questions at the end, because hopefully we have some. Access to capital, we have a whole webinar. The Zoom, our next one will be about that. So we'll make sure to kind of dive into that. But, as I mentioned, you want to grow cash flow, but you also want to reinvest it back in your business. If you're not growing cash flow, you don't really have a proven kind of concept for the business yet. So that's kind of the first step. Then once you grow the cash flow, you want to reinvest that back into the business. And here's some reasons why, right? Because, you can go into a new or existing business. So that just means that you are either acquiring a business that somebody's selling, and ultimately you have expertise in that area. You can run that really well. They already have customers. They already have, suppliers. They already have, a good market share. And you want to be able to just enter in that business and just run that business. That's a reason to have access to capital. Purchase new equipment or facilities, right? So if you've outgrown your facility and you're looking to ramp that up, you need capital to be able to do that. Acquire a supplier. So that just means buying, a company someone's selling, and, you've done business for them with them for a long time. Maybe buying that business, you can insource that. It's a great solution to really grow the cash flow. Fund the tax obligation. So obviously we're in tax season. I don't know what everyone's tax bill looks like, but for business owners, it can be very complex. Selling investments to do that isn't always the wisest decision. So, having capital available for that is always good. Make capital improvements. So for the assets that you already have in the business, if you've had a machine that you've had for 10 years and it's been breaking down and the maintenance is costing more than just buying a new one, but you don't have the cash flow to really do that, that's really what you want to look to do, is figure out, what is the best way to get access to that capital. Here's some of the ways to do it, and this really has to do with the investment portfolio, but there's ways that apply to business as well. We'll discuss that more next week, I believe it's next week. Isn't it, Sarah, the 19th?
I believe that's for the 26th.
The 26th?
But,
My apologies, for the 26th. So we'll get to that when we discuss that. But this really kind of goes into that. Cash management, how much are you spending, how much are you saving for the businesses, how much are you retained earnings, how much are you reinvesting back in the business, and are your bills being paid on time? That could apply to, accounts receivable, accounts payable, having an understanding of what those look like. If your accounts receivable are growing, right, that's not always a great thing. It means that you're not really collecting in time. So you really want to make sure you have an understanding of that. And then this really applies to more of the personal side. But obviously, a lot of the business and personal expenses and income are connected. So if the business is down on cash 1 month, you probably need to access your personal bank account to fund some things, or, whatever it is. So this is all here for that. So any questions on this page? Okay. No questions yet. Karen, you still good over there? You don't have any questions? None yet?
Good, not yet.
Okay. All right. I'm just checking. Karen's my person on this call. She's checking. She's making sure that this is all good. So I just wanted to check in. Insurance for the business. So key person insurance is the only one listed here, but there's a lot of insurance. I'm sure you guys are familiar with it. We could definitely, schedule time just to go over all the different ways to insure the business. And this is really to make sure that you don't have to come out of revenues or profits to really fund, things that you could have insured. That's to protect the business and also to protect your personal finances. Integrated asset allocation analysis. It's a fancy word to say, are you diversified? I know I keep saying it, but business owners have a lot of their wealth tied up in their business. We just want to make sure that's all understood, the risk is understood, and that the business is growing enough to make sense to be a huge position in the portfolio. So aside from that, I don't have anything else on this page. Any questions here? Okay. All right, so, attracting and retaining talented employees. So this is where the 401k plans come into play. Usually if you start to get towards that 10 employees on your payroll, it's pretty a good start to start having the conversation on, having your own retirement plan, because you want to talk about legacy. I mean, a lot of the employees that work for incredible small businesses don't have a lot of the benefits. So it's hard to keep them there. And that's something we definitely want to fix, because there's a lot of resources out there that are very cost effective. So we just want to make sure, you guys are aware of those resources. Many different retirement plans. I'm not going to dive into that completely today, but they are available. And then just the financial education and services, right? Really understanding what the mix looks like, and going from there. Gregory, you have a question. Awesome. What is it?
So is there such a thing as fractional retirement plans? In other words, let's say you're a business owner, but you've got less than 10 employees, and maybe there's 2 or 3 companies that have 4 employees each. So they've got 12 or 15. Does that work?
So great question. Great question. I appreciate you asking that. So there's solo 401ks. There's SEP IRAs. These are not necessarily for the bigger, huge, amount of employees on payroll. They're more so for the very, very small, companies, to where it's just the owner or it's a couple people aside from the owner. The reason those are more important than a traditional IRA or a Roth IRA is because the contributions are larger. So, I don't have it right in front of me. But the contributions for a solo 401k are obviously the same as a traditional 401k. And because of that, you have the ability to put more into a Roth or more into a traditional 401k, which means that you can basically get a deduction for the income that you're making, which means that you're paying less tax at the end of the year. So to answer your question shortly, Gregory, it's the SEP IRAs, the solo 401ks, those are more for the companies where it's just the owner, perhaps a couple different employees as well. And we can dive in on that, in a follow-up too. Always happy to discuss that.
Yeah, sounds like the answer is no. There aren't fractional 401ks, but there are alternatives.
Well, so when you say fractional 401ks, I just, I want to understand that. I don't know. I've never heard fractional 401ks.
I haven't either. So just the concept that I was thinking, where if you've got you can set up a plan where more than one employer can contribute to that plan. So it sounds like that provision is not there.
Gotcha. Okay. I think I hear what you're saying. That's a great question. There's always nuances and loopholes around. I believe if it's There's structures that I've heard for that. The best person to ask would be an accountant or CPA, because that kind of gets into that land. But you know, there's profit sharing plans, there's 401ks that are combined with profit sharing plans, there's DB plans that you essentially have to fund yourself. A lot of doctors do those because they're trying to get as much deductions off their taxable income as they can. So yes, the short answer is yes, but it's very complex and it's very situation specific.
Thank you.
But there's different entities that you could essentially basically fund retirement with, is how that would go. So, is there anything else? Do you see any other questions in the queue?
Let's see.
Think-
All
And
right.
I don't
See,
have
Terry,
access to the chat, so
you don't
yeah.
have access to.
Yeah,
Excuse
I
me.
can't see the chat, so hopefully I'm not missing
Okay,
anything.
gotcha. So yes, Terry has a question. If the legacy owner wants to sell the business, can the employees use their 401k to buy the business to keep it in the community? Can Morgan Stanley use the private wealth division to facilitate the loan?
Yeah, so there's a structure called an ESOP. And basically, you know, it allows the employees to buy out the owner. And you're given a loan from a bank, and it's a very specific structure. It's not necessarily pulling from the 401k, although you can do that. It's less tax efficient because it wouldn't qualify as one of the ways to avoid the 10% penalty if you're before 59 and a half. And you wouldn't be separated from service, which is the way to get around that at 55. But there is an ESOP that's available where the employees basically come together, they obtain a loan from a bank, and they buy out the owner. It is very complicated, but it is able to be done, if I'm hearing the question correctly. So I just want to make sure. And it was Terry, right? Maybe.
Yes, Terry, Mr. Terry. And
So,
there was a second part. Can Morgan Stanley use the private wealth division to facilitate the loan?
we could do that, I believe. Yeah, and like I said, we'd be more on the loan side as far as the administration of it. The accountant usually leads that, but I don't see why we wouldn't be able to facilitate the loan. We actually have two banks within Morgan Stanley, which is pretty cool structure, but we should be able to facilitate that loan.
Wonderful. We have another question. Cheryl says, I think the question was, say if 5 businesses wanted to come together with a group pension plan.
There is a structure like that. I'm not an expert in that space, but there is that. That's from my CFP book days, so I'll have to go look in that reference, but that is available. It's very rare. An accountant would be the first person to contact about that to get it set up, but it is able to be done, from what I remember, unless they change something with recent, legislation. That should still be an available choice.
That's it so far. Thank you.
Okay, perfect. No, thank you. Sorry, I don't have much access to the chat. Let me see. All right, so this is kind of the great page that goes into all the details of everything. I mean, there's a lot of stuff on this page. There's so much we can discuss. Probably gonna leave it on here. See, yeah, I'm gonna leave this page on here, Sarah, because there's so much to go into, and I really just want to save time for Q&A. Do we have time for Q&A, or what do you?
Yeah, we have about 10 minutes left.
Okay.
So however you want to structure it within that time is good. But what I
Yeah,
do want to convey is that one of the things about in-person summit that we're going to have on March 4th is it'll be an opportunity to dive deeper on a personal level too, with whatever your particular situation is. Because like in these general forums, it's just so much that you can really get into. But just wanted to say that in terms of what is in store for the summit that we'll have on March 4th.
absolutely. The last bit of kind of advice, I can't say advice. The last ideas that I would kind of share here. So, really there's kind of three ways to really improve your business, right? I wasn't able to put it on here, but I kind of just want to vocalize it, right? So you can obviously grow in the revenues. A lot of that comes from just increasing your share of the market, right? There's a lot of different ways to do that by itself. Three of those ways are pricing, so figuring out a good pricing structure that's competitive. A lot of Black businesses undercharge what they should be charging because they feel like they're not going to retain, their customers. Please get a market analysis, get a competitive pricing analysis. You can do it with AI now. I'm not going to be the whole AI saves everything, but you can get a lot of good resources and a lot of good information and data from AI. If you say what industry you're in, what product you're selling, what are people charging for this price or this product or service. So pricing is the first way to really increase revenues. Volume. So increasing your marketing strategies is a really good way. You have a lot of sales optimization techniques, Google advertising, Yelp, all of those things are crucial because if you have a great product or service, getting that out there to the right people with the right data is great because you can track who clicks on it, who's asking, and then you call them right after, let them know what you do, ask them, who their provider is, and kind of go through it that way. So price, volume, right? And the last thing is really, what we would call kind of transitioning. So looking at what other products and services you can offer that are ancillary to your standard products and services. And that's really just talking to your customer and having a good relationship with them and understanding what else they need in addition to what you're providing. So that's a great start. And then, cutting costs, right? So there's so many costs that you guys all have to deal with, right? Linda obviously brought it up. Fees alone, startup costs. How do you figure out how to do that? I mean, that could come through procurement, right? That can come through technology. And I know you guys have had Sarah's put on a bunch of those webinars really to address those issues, right? So you're growing revenues, you're decreasing costs. Now, the last thing is really focusing on, what the buyers are thinking about. The buyers want to know that you have a diversified customer base. They don't want to see a large concentration where you have one customer. Because one thing could happen to that customer and then you're out of business, right? So you want to make sure that you're attracting all these different customers. You want to have a great management team. So if something happens to you, the business isn't going to suffer, right? So that's kind of key. And then you really want to have an understanding, right, of, what your contracts are, right? Do you have contracts in place? Do you have barriers to entry? Do you have trademarks? Do you have anything like that that's really going to separate you from your competition? So those are three ways to really think about the value of your business. I tried to be short because I talk a lot, and I want to make sure we get some questions in. I don't know. Hopefully I gave something for Karen to ask a question. If I didn't, then I failed, and Sarah shouldn't ask me back next time. So anything in the chat?
Haven't seen anything different, as it were, a question coming in. So I think, does anybody one last go around? Okay, we got Xenia. Want to unmute yourself?
Yeah, thank you. I probably should show my face too while doing this just to be proper. Hello,
Hi, Xenia.
everyone. Hi. And I want to say, is it Rashawn?
Yes, it is.
Okay,
Thank you.
so Rashawn, thank you so much for the valuable information. Hi, Sarah. It's been a while since I've seen you. Um, I want to say first and foremost, thank you for the information. I've been in business for 9 years, and there is a lot of things that I am working towards. So I don't know if it's a question or it's just an acknowledgement of what you did share was very valuable. And
Thank
I
you.
know that this first quarter for my business and for my team, we are focused on generating more business, right? So we're
There we go.
doing more cold calling, right? We're stepping out to more industries that I did some research using AI that my business could transfer over and still provide valuable support. I don't necessarily, I'm a service-based business, but what we also decided was to step out in different industries, right? So now we're selling a product that is in line with our service-based business, but it kind of speaks to our community. So for instance, I'm an administrator, right? And we provide administration and project consulting. So we have these t-shirts and hats and bags and book covers that our administrators could use, right? Our administrative assistants. We've created an academy, right? That can help people that are in the administrative field to sharpen their skill sets. So just going along with what you recommended, not only just the legal foundation, but also being able to shift and be flexible and to see how your business can generate that additional income so that you can get the attorney and the advisor and all the things. So I just wanted to say thank you because I'm on the right mindset. That's where I'm going, but we need to generate, more revenue. And so that is the goal of all the things we're tapping into for this first quarter to help us to get there. So
That's awesome. I appreciate you sharing that. I'm so excited for you, especially next year being your 10th year, right? So yeah, I mean that's just huge. I really appreciate you getting on the call today. And I'm so excited for you, and we'll have more of these, and hopefully. But it sounds like you already read the script, so you already know kind of what I was going to say. So I'm glad to hear it's working.
No, I was just like, he is straight on it. Like, at least I know that I'm on the right track, right? Of trying to build a solid foundation and build legacy for my daughter. So it's not just about me. It's about, my adult daughter building that legacy where she can carry it on and her children when she has it and so forth.
That's awesome.
So thank you so much.
Thank you so much. Thank you.
Yeah.
We
Absolutely.
have time for one more question, which we have Miss Melissa Phillips on. So with the last question.
Who is a Morgan Stanley legend, by the way. She started way before I did at Morgan Stanley. Melissa's awesome. So glad to have her here.
Thank you guys. Thank you guys. I just wanted to chime in because these are small business owners and I'm married to a small business owner myself. And I just wanted to just put it out there about the how retirement 401ks are not an option, going to be an option any too much longer. If you guys have awareness about the Cal Savers program, you might want to start getting familiar with that so you won't get penalized. And it's probably best if you opt to do your own 401k with your employers versus doing the state mandate one. So I just wanted to put that out there to the business owners that's on the call.
Thank you, Melissa.
Oh, thank you. As you can see, I reclaimed the notes there, Rashawn. Sorry about that.
No,
Just
you're
had a
good.
tight deadline for today, but thank you for that advice, Melissa. We appreciate that, or information. We appreciate that. So Rashawn, anything in closing that you would like to say for today? And I'm going to load up what our next part in the series will be.
Yeah, just quickly, I appreciate you all jumping on the call. I know it's kind of crazy time with the start of the year, and but we're excited for this. We've been working on this for a while. We want to know what you guys want to know. We want to know the questions you're thinking about, because this is for you. And I don't want anybody to fall asleep during these presentations. So we just make sure that you're giving us feedback and seeing what's working or what's not working. Xenia, it was great to hear that. I'm so glad. We want to see you succeed, right? I think that's the whole point of the call, is how can we kind of share, some things that we've seen that have worked, and how can people use them. So that's all I got, sir.
Wonderful. So for next Wednesday at 10 o'clock on the 19th, it's scaling with capital resources. So 10 o'clock next Wednesday, we love to see you back again. And then, as you can see, we have another third part of the virtual series on February 26th for succession planning and legacy building. And then we'll see you in person on March 4th. And again, that will be a great opportunity to really get a bit deeper in terms of wanting to learn, ask questions, and build relationships too, right? So Morgan Stanley will be in effect and ready to provide more information on that day. So we want to thank everybody for joining us today. And we look forward to seeing you return for next week. All's good.
Thank you all.
Thank you so much.